Well, thank you everybody for joining us here on this live webinar. You're here for a reason. You're not here by mistake. You're here because you're probably feeling quite confused and maybe a little bit overwhelmed. This is about to be one of the biggest transactions in your life, and you're probably feeling a bit uncertain about the property market right now, as a lot of us would be. So it could even feel like it's almost impossible to purchase property right now because you can't go and inspect property, which is true. But we want to show you the steps that you actually need to take before you're in a position to buy a property. Now, when I say this, it can actually take anywhere between, say, 1 week, if you're super duper organised, up to 6 months to actually get yourself into a position to be able to purchase the property that you're wanting to. So often we get people come to us that want to go to an auction this weekend to purchase a property. And that a lot of the time that's just impossible because you don't have your finance in place. There's just so many steps that you need to do before that, and odds are that you're going to make some bad decisions if you're rushing into something like that. So you really need some people in your team that you can trust to help you through this. So we're here today to try and make it as simple as possible and show you a step-by-step formula so that you can understand the process of buying property and how you can be irresistible to the banks and get the funding that you need. So who are we? Well, I'm Lisa Stafford and I'm a fully licensed buyer's advocate. I started my career in real estate. In actual fact, it was the backbone of real estate in admin. And I managed to work my way through pretty much every single department that there is in real estate, which is kind of cool because I've got a little bit of an advantage over most advocates, which is great for you. But it was when I was in sales that I really noticed the gap in the level of service that is being provided to buyers. You see, this is probably one of the only instances where the buyer is the consumer, but they're not the client. You see, in real estate, the seller is the client, not the buyer. So I guess I got to a stage where I realised I could actually use my experience and my knowledge to help people that were in a situation where they needed to understand how to buy property correctly and deal with the agents in a way that was not going to jeopardise them. So I created my own business as a property advisor. And look, I spent the last 5 years pretty much researching my services so that I can empower people like you to make the right decision and actually enjoy buying property. Because at the end of the day, you want to buy the home of your dreams. So without further ado, let me introduce you to Lisa Wilson.
Thanks, Lisa. So Lisa and Lisa show here. I'm Lisa Wilson, the finance expert out of the two of us. I started a business called Finance and Heels after I worked in the bank for over a decade. And I found that I had these beautiful clients come in and I couldn't actually give them products that were actually more tailored to their needs. I'd have to give them what the bank offered. So becoming a broker, I've now got access to a huge panel of lenders, a huge suite of products, great rates, banks that you wouldn't actually have access to unless you used a broker, which often have some really good pricing associated with them, which means that I can now save my clients time, money, and actually tailor stuff to them specifically. So that's pretty much why I got into broking. So that's a little bit about me. We have some housekeeping. This video is being recorded, so if there's any little nuggets of gold that you come across but we've gone over a little bit too fast, you can't keep up, you can go back and watch it. It'll be emailed out to you after we finish. We're also, if you've got any questions, put them in the chat box, and when we finish doing our little spiels, we'll get to those and answer any questions that you might have. And this is a disclaimer, which is also in the chat box. that it's all general nature information, because when you buy a house and you are looking for finance, it really does have to be tailored to your specific needs. So the information here is to help you and guide you, but it isn't tailored to your needs. So just be mindful of that. So now let's get started on where to start when you're buying property. Thanks, Lisa.
Yeah, thank you. So let's start with working out what your brief is. And, you know, when I sit down with my clients as a buyer's agent, I generally go through this with them. So one of the key components that can often be missed is the emotional side of buying property. And this comes down to, you're not just buying a house, you're actually buying a home and you're creating a lifestyle. So it's really important that you get this right. Did you know that 44% of buyers, that's almost half the buyers out there, actually end up paying more than they intended to because of an emotional decision? So it's mind-blowing. Once you've worked through our step-by-step formula, we're going to be able to show you how to actually think logically and understand how to buy for the right reasons, as well as the emotional, but it's just going to give you a different perspective on what you need to look at. The next component is how to identify who the actual key decision makers are in this process. It's really important that, you know, you're going to have lots of friends and family that are very well-meaning, giving you lots of advice and, you know, putting their 2 bobs worth in, which is great. And, you know, it's important to have that and have that support. But just, you need to understand who is making the decisions, what's important to them, and what you are prepared to compromise on. And I'll give you an example of this. And let's be a little bit stereotypical, because we can. Say you've got a man and a girl, they're wanting to buy a property together. You know, the guy, he's more interested in the garage space, you know, where he can park his car and put his tools and maybe have a beer with his mates on a Friday night. Whereas the girl is probably more interested in the kitchen and, you know, where the sink is in comparison to where the oven is. And, you know, together, they both need to understand what's important to each other so that, you know, when you're actually making the decisions that need to be made, you know together what you are prepared to compromise on. And some of those aspects come down to, well, the one thing you probably can't compromise on when you're a first home buyer is budget. Okay, so price is going to be a really key factor in the process. But the other things that you probably could compromise on, but you need to agree on, is the location of the property that you're choosing, the number of bedrooms, the number of bathrooms, the amount of living space that's available, the kitchen, the car space, your access or levels of the home, that could be a really key component, the size of the land, and also the amenities that are close by. Which brings me to the next component, which is the region, the location of the property. It's about finding what location is going to suit your needs the best, and that's going to come down to what sort of lifestyle you want. So do you want to be close to friends and family? That might be really important. Or are there certain shops that you want to be close by, or parks, reserves, schools, transport, access to the CBD, the airport? Do you want views? You know, do you need to be facing a certain way, or, you know, do you need to be close to work? You know, these things are all things that you need to consider and be aware of and discuss with one another. Now, a great way to research this is to explore the suburbs that you're looking at. Now, that's a little bit hard at the moment, but I've got some great news for you. You can actually explore the suburbs online. And we're going to send you an email after this webinar that's going to have all these links included in it, so you can reference to that and have full access. But there's a really cool link that will show you everything you need to know about each suburb that you're actually considering, and that comes down to the demographics, the people, the lifestyle, the homes that are available there, you know, because the suburb is actually influenced by the people that live there. It's going to show you what the median property prices are, what the supply and demand is in that suburb or in that location, which is a key factor in pricing. It's also going to give you an idea of the trend in prices and what similar places to compare with. So if you're looking at a specific suburb, but it's just out of your price range, and that's not something that you can actually achieve, then it will give you other suburbs that are comparable to that, which, you know, might be a little bit cheaper, a bit more affordable, and something that you might not have even thought about before. So it's just something really valuable that you can look at. It will also show you what properties have recently sold and also what's currently on the market. So it's a great way to get yourself educated in those spaces and areas that you really want to look at. The next component is understanding how to read a floor plan. Now, you might think this is pretty basic, but it's going to save you so much time when it comes to inspecting properties. It's going to reveal the space and the flow of a home, and if you know how to do it, you're going to be able to identify which homes are going to suit you more than others. So have a look at you know, where the doors are, where the stairs are, where the windows are. All those things are really important. Look at it from a perspective that you're taking the lid off, taking the roof off the home, and you're looking down on it like a bird's eye view, all right? And so what I want you to do is start at the front entrance and visualise yourself walking through the spaces. Follow the flow of the home, and, you know, just imagine yourself using those spaces. Go through each room on the floor plan. Can you imagine yourself living there? Consider the bedroom sizes and the layout. So where are the wardrobes? Where are the windows located? Are the bedrooms large enough? So generally speaking, a standard double size bedroom should be 3 metres by 3 metres. So don't get caught up in the tactical old trick of, you know, saying that a home is a 3-bedroom home when the third bedroom isn't really a bedroom. It's more of a study or a storage room, really. So anything smaller than 3 by 3 metres is a little bit of a compromise for a double bedroom space. And also, you know, some bedrooms are a funny sort of layout. They might have a corner cut off or something like that. So, you know, have a look at where the bed's going to go in comparison to where the window and the wardrobe is, and that'll give you a bit of an idea of, you know, how much, space you've got to use, really. Another really cool trick is just visualising how high the ceilings are by looking at the photos on the listing. So if you know that a standard ceiling height in Australia is 2.4 metres, but preferred ceiling heights are probably 2.7 or 3 metres, you can kind of gauge, because a doorway is 2 metres and 40. So if you can see the photos and, you know, you've got this much space above the door to the ceiling, you know it's a 2.4 ceiling. But if you've got this much room, then it's probably 2.7, all right? So that's a really cool trick that you can kind of use. Another thing, you can use yourself as your own measuring tape. So like I'm 164 centimetres, and with my arm reached up high, I'm just a tad over 2 metres. So when you're actually inspecting properties, you can use yourself as a measuring tool. Just a little tip. Another thing that you can probably look at, which is really important, is the orientation of the home. So generally speaking, north is the best orientation because that's where you're getting all the natural light coming through. So if you've got a living space that's facing north, that's fantastic because you're getting all that natural light in. So keep that in mind. The next component is budget. We love this, don't we? But look, if you've already started saving and you've got a deposit ready, then you're well on your way, and congratulations, you're doing really, really well. But you need to understand how much you could actually borrow and how much you actually want to spend. Because, you know, don't start shopping until you know how much you've got to spend. There are other costs involved in buying property, and, you know, whether you're aware of that, that's what we're here to do, is to give you all the information that you need so that you can make the right decisions. So the other costs that are involved in buying property. Okay, so let's start with conveyancing. So conveyancing is the legal side of purchasing property. So you would use a conveyancer or a solicitor to pretty much do your research or your due diligence for the property that you're interested in. And what they do is they check over the legal documentation, being the vendor's statement, which is all the information about the property that you want to purchase. And they will check that through and give you their recommendations and their review on the property. Generally speaking, a conveyancer costs probably around $800 to $1,500, depending on who you're getting and where you are. Another cost that you need to consider is a building and pest inspection. And as a first home buyer, I would always recommend that before you get a property or before you purchase a property, you have a building and pest inspection done, or the offer is subject to a building and pest inspection, because the last thing we want you to do is buy a property that has got some underlying issues that you were not aware of. Another thing is the adjustment costs at settlement. So this is something that you need to factor in. And what this is if you've, like the owner of the property that you're purchasing has paid the council rates and the water rates for the whole year, and you purchase the property here. So at settlement, those amounts that were paid for the entire year are adjusted. And whilst you don't have to come up with that money to start with, that's adjusted at settlement. So it's part of the cost of settlement, okay? So you need to be aware of that. There's also moving costs. So unless you've got a team of family and friends that are ready to lend a helping hand and know how to do it properly, you're going to have to get some professionals to help you, depending on how much stuff you've got. But if you need that, you need to factor it in. And, that can range as well in costs. There's other things like mortgage registration fees, transfer fees, and some lenders will charge application fees, settlement fees, and they may even charge to value the property. And that can vary, depending on the lender, anywhere from nothing to up to $900. So, it's important to understand and allow for that as well. We don't want to scare you, but we just want to, educate you and, make sure that you understand all of that so that it doesn't become a shock when you're actually wanting to purchase a property and then you realise you can't actually afford it. So it's about getting all that stuff in place beforehand so that you know exactly what to do. Speaking of which, Lisa is about to explain to you everything there is to know about getting your finance and, just the basic steps and what you need to do to get that happening. So thanks, Lisa.
Probably scare people more.
No, I don't want you.
Thanks for all that. I hope everybody got some great advice and tips out of that. Lisa obviously has been in the industry for a long time and knows what she's talking about. So following on from that, obviously getting your finance right before you even start shopping, because as soon as you make a phone call to someone like Lisa, they're going to say, have you got your finance organised? And you need to come and see a broker or go to your bank or wherever you're going to get your money from. You need to go and sort it out quick smart before you start shopping. Bit of a killjoy, sorry about that. Now I'm going to look at how you're going to prepare yourself to make you look irresistible to the bank. So unlike our parents, who they used to have to get dressed up in their Sunday best, go to the bank manager, actually sit down for a formal meeting inside in the bank, we don't have that luxury anymore. We're now doing it on an A4 piece of paper, and we have to present the best version of you that we can on that A4 piece of paper. So there's no human involved in it. I don't know whether the banks aren't going to be able to see whether you're a volunteer at the soup kitchen, whether you're as keen as mustard to do this, that you're really dedicated. They're not going to be able to see your passion, any of those things. So we need to make sure that we get your application looking schmick. And to do that, we're going to use something like we did at school, which is a banking report card. So just like when you were at high school and if you got A's and, did awesome with your results, you got access to better universities or apprenticeships and things like that. Job prospects were a lot better. The same with banking. If you get an A on your banking report, you're going to have access to a full panel of lenders and their full suite of products, which means that you get the pick of the choice, or choice of the pick, whatever the saying is, and you can get great rates, great products and services. If you have a B, your panel of lenders decreases slightly and you might not get as sharper rates. By the time you get to a C sort of banking report card, your panel shrinks again, and obviously the rates aren't as sharp either. By the time you get to an E on your report card, there potentially still be a bank out there for you, so we're not going to preclude you from getting finance. but the panel of lenders will be very small, and because they're small and they're taking on that little bit more risk because an E grade isn't great, well, isn't spectacular, you will be paying more for it. So you'll be paying a premium price. So we're going to go through now how the bank actually determines your banking scorecard or your report, and that is by the 5 C's of lending. And the 5 C's are your capital, capacity, character, collateral and conditions. And we'll break those down into those 5 groups. I'll go through what they are, and I'll give you my tips to try and get you the best banking report card that you can get. So the first one we're going to look at is character, and this is actually overarches all of the other 5 C's, and it's really, really important. This is your credit profile, more importantly, your credit report. And most people really undervalue their credit report. It's probably the most undervalued asset that you have. Your credit report actually tells the bank whether you've got stability in your employment, whether you've moved around. So do you move interstate all the time for work? Do you travel like too far? Like, you know, if you're a bit of a, what do they call it? A genie, not a genie in a bottle. One of those people that move around a lot, a gypsy. Are you a gypsy lifestyle, etc.? Obviously, when the bank looks at your credit report, they want to see stability. They want to see someone who is going to stay put and make sure they pay their loan. Likewise, your credit report will show the bank if you pay your bills on time. There is a myth that says that you need to go out and get a car loan or a personal loan when you're a young person to build up your credit file. That's actually not quite true. Today, with comprehensive credit reporting being in play in Australia, you now need to just have a Telstra phone bill or a mobile phone account, electricity account. These are all now starting to be recorded on your credit report. So there's full 12 months of your payment history on there. So it'll show whether you've made your payment on time or paid your bill on time every month for the next 12 months. So you don't need to go out and rack up debt just to get a credit rating. That's incorrect. Other things that your credit report will show is any defaults that you might have had and all credit inquiries that you've made. So if you've shopped around for credit cards or cars, car loans, etc., they will all be on your credit report. And the more you shop, the banks kind of go, oh, not real keen on that. So it's important that we don't apply for finance that we actually don't need. So that's quite important because it does actually impact your credit score. And your past credit character, which is on your report, is actually a really strong indicator to the bank of what your future credit character will be like. So if your past credit report and historically shows that you're actually a fairly stable person, you pay your bills on time, you don't go and apply for finance that you don't really require, and if you do have finance in place, it is paid on a timely basis, then this is going to be a really strong indicator to the bank that you're good to go. So that's what your credit character is, and that's what the banks will be looking at. My tips for you in terms of your credit character is to make sure that you pay your bills, your credit cards, your car loans, any type of credit facility on time every time, because it is recorded on your report. And in the lead up for applying for finance, try and make sure that you keep that stability in place. So, try not to move around too much or change employers just before you apply for your finance. The next C we'll look at is capacity, and this is your ability to repay the loan and effectively impacts what you can borrow. So we'll determine your borrowing capacity. This is your income less any expenses and liabilities, and the surplus that you have left after you've paid those expenses and liabilities out of your income is what the bank will use to determine whether you can actually repay your mortgage. Obviously, if you're renting, we won't take into consideration your rent. That will obviously disappear when you move into your home, unless, of course, it's for investment purposes. But that's where we look at your income and expenses and the surplus that will be available to repay that debt. Now, it's quite often that we find that people will go, okay, yeah, I think my expenses are this every month. I've got a budget in place, but they don't really reconcile it and make sure that they stick to it hard and fast. So banks are now asking for your bank statements, and they'll usually ask for 3 to 6 months worth of bank statements, and they will actually go through all your transactions and look for those things that you might have missed, like gym memberships, TV subscriptions, after paying and zip pay facilities. And these all have an impact on the amount that you'll be able to borrow. So if you can reduce those, it will obviously increase the amount that you can borrow when you apply for your finance. So in the lead up to applying for finance, usually 3 to 6 months, because that's what the banks will ask for in terms of your bank statements, you want to try and limit your discretionary spending, so not too many espresso martinis with the girls or smashed avos, as apparently millennials love, and close any unused credit cards that you may have, because even if it's got zero balance on it, the bank is going to say, yeah, you have access to spend that. So if you've got a $5,000 limit, they're looking at it as a $5,000 personal loan that's been fully utilised. So they're going to say that you've spent all the money on it because you can put your application in today and you can go and have a massive big shopping spree tomorrow. So we want to reduce those or close them where we can, and that will obviously help your borrowing capacity and that surplus at the end of your pay period and cycle. The next one we're going to look at is capital. Now, this is how much skin do you have in the game? What have you saved? What deposit are you going to contribute to the loan? So the bank's taken a big risk. They're going to see a first home buyer who's never borrowed this sort of amount of money in their life. What makes me, the bank, want to give you money? And that would be your commitment to it. So if you're prepared to put money into it, I believe that you're going to try and pay this off because you don't want to lose the money that you've invested. Okay, so banks, ideally, their sweet spot is they like to see 20% deposit with costs paid for. Now, as Lisa mentioned before, the cost with stamp duty, etc., all built in. On a $500,000 property, the cost might be about $30,000. The deposit for 20% is $100,000. So it's $130,000 you have to save, which is a lot of smashed avos and espresso martinis to forgo. So it's not the be-all and end-all of getting to that 20%. Like, obviously it's preferred because then you don't have to pay low mortgage insurance, but there are other alternatives, particularly if you're renting, because it's extraordinarily hard to pay for rent and save that type of deposit sort of thing. So there are other avenues and alternatives, but that is the bank's sweet spot. So a way to overcome that sweet spot, and I can't reiterate it enough, is to show the bank that you are genuinely trying to save. So when I say genuinely trying to save, I mean every time you get a pay, you transfer some money into another account that is dedicated to your home loan deposit. It might be $20 a week, it might be $500 a week, but whatever it is, it just needs to be regular and consistent, because a bank that sees that you've committed yourself and regularly contributed, and particularly the same amount, goes, you know what, this person's really committed to this transaction, they really want to make this happen. So a regular savings contribution is, I can't tell you how important it is. Particularly if you are a renter and you are going to try and go for the 5% deposit to get into your first home, that it's completely doable, and a bank that sees that regular savings and genuine contribution will approve your loan over someone who will go, okay, let's use the first homeowner's grant as the deposit and try and get into a home that way, who hasn't saved anything regularly. So that comes back to that character piece as well. So showing that you've got some skin in the game, that you're committed to this and that you're working towards it. So my tip, it doesn't matter how much you save, just make sure you start saving. When you get to that 5% deposit, that's when you can start investigating your finance options, and with the first homeowners grants, etc., that are out there now, it just might mean that you can get in the door a little bit sooner. The next one we're going to look at is the collateral. That's actually the property that you're going to purchase that the bank will use as their security. Now, if you were to default and not be able to repay your loan, they're going to sell this house and it's going to pay the debt out. So they're going to make sure that it's going to be worth the value that they're going to give you the money for it, to make sure they get their money back, because banks don't do anything for free. So you need to consider things like, is the postcode acceptable to the bank? Is the size of the property okay? Is it vacant land? Is it an apartment? Is it a fully detached house? And what were the purposes that it'll be used for? Each bank will have a different appetite in regards to each one of those properties. For example, buying a property that's an apartment in the city, in the Docklands, you will find that your panel of lenders might go from 40 down to 5. You might find that an apartment that's under 50 square metres will fit the same bill. Yet an apartment in Paran, every funder that's over 50 square metres under roof will meet most banks' requirements. So making sure that you check out that the property that you're looking to purchase will meet the bank's appetite is really important. And the way to do that is to either speak to your broker, your buyer's agent, or bank. And the final one is the conditions. And the conditions, they refer to how you're actually going to set up your loan and the purpose of it. So is it for your yourself to live in, or are you buying it for investment purposes? Will it be principal and interest repayments, investment, fixed, variable, interest only, those sort of things? As first home buyer, the bank's probably going to have a preference that you live in it, obviously, particularly if you're going for the concessions and grants that are available, but also that it's set up as principal and interest, because it just shows the bank that you're trying to pay off the house and the loan that little bit quicker from the start. So that principal and interest repayment obviously helps do that. So it just makes the bank feel a little bit more comfortable in it. That's not to say that there won't be a bank out there if you need to do it as interest only to start with. There are banks out there for most scenarios. We're talking about getting you the A rating on your report card. That would probably be the bank's preferred structure of the loan. The other part of the conditions is stuff that you can't actually control that come into play, and that could be legislative changes, the state of the economy, industry trends, and at the moment the pandemic, like that's having a significant impact on people who are self-employed or in those industries that have really been hit hard, such as tourism and hospitality. Obviously their access to funding is not as good at the moment, which is a real shame. Well, the whole situation is just a real shame. So they're things that are outside of your control. Now, that in brief is the 5 C's of lending, and will help you work towards getting that A on your report card. I'll just give you those couple of tips and real places to focus on again, being that you need to check your credit file. Oh, I don't think I said this. Check your credit file. You can go to Money Smart website, which is a government website. The credit reports on there are free. There are 4 reporting agencies that you can get your credit file from. Check it for fraudulent activity. During COVID, the thieves in the world are getting a little bit more technologically savvy, and identity theft is becoming a thing. So check it to make sure there's no inquiries on there that you haven't actually been responsible for. Make sure that everything on there looks quite neat and tidy and is where it should be. And you can do this once a year, and that is a free service. Don't apply for unnecessary finance. And if you have got credit cards and unused limits that you don't use, close them down, because they will impact your credit ability to borrow. Aim for stability in both your employment and where you live in the lead up to applying for finance, and obviously reduce your discretionary spending, although I think the pandemic's kind of helped us with that. The one that I can't reiterate enough is save, 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 and on a regular and consistent basis. Check with your broker the suitability or your buyer's agent, the suitability of the property that you're looking to purchase to make sure that it does meet the bank's appetite, and structure your loan so it's actually favourable to the bank, so they know that you're committed. So they're pretty much the 5 C's. That's a quick overview. Obviously, there's heaps more information that sits behind that, but that gives you a really good indication of some of the things that you can start working on, that some of them are quite easy just to tweak and get you looking much better to the banks. The other thing we're going to look at is the grants and the concessions that are available to first home buyers. Now, these are state-based, a lot of them, so I will quickly just round off Victorian ones. So I won't go into bucket loads of depth, but the idea is that if you have any questions and you can't figure out the State Revenue Office website, which I wouldn't blame you if that's the case, then you can give either myself or Lisa a buzz and we'll obviously help you with those. Now, the first homeowners grant is available in Victoria in Metro. It's 10,000. In regional, it is 20,000. It is available to Australian permanent residents for new property. So whether you've built that or it's just been newly constructed, that is something you can buy. And again, it's for first homeowners only. So anyone who's a party to the transaction cannot have owned property before in any state of Australia. When I say new home, it could be up to 5 years of age, but no one else who's lived in it should have been able to have claimed the first homeowners grant on it. So there are some real little tweaks and terms and conditions in there that can make or break whether you get it or not. And the bank will actually handle that and use it as a deposit, which is really handy. The next one we'll look at is the stamp duty concession for your principal place of residency. Now, this is an unreal concession. unreal, such an old people's word, sorry. But it's an awesome concession because it means it eliminates the stamp duty from your transaction if you purchase a property up to $600,000, which on a $600,000 purchase price saves you $31,000. So that $500,000 property that had, $30,000 worth of cost that you had to fund as well has just been reduced down to about $5,000. So it's a massive saving. It is available for both first homeowners on new property and established property. So you could purchase property that's 100 years old and you will still get this concession. So that's really handy tip to know. It starts to scale down from that $600 to $750 purchase price. So you'll still get a discount, but it won't be eliminated completely like it is if you purchase under $600,000. The difference with that one in particular is that it's for Australian citizens, not permanent residents. The next one is the First Home Loan Deposit Scheme. Now, this is a new scheme that was introduced this year. There was 10,000 places offered by the Australian government, and they were all snapped up really quickly. So there's been another 10,000 released as of the 1st of July, and it's not all banks are participating in the scheme, so it is only through selected lenders, of which most aren't in the mainstream. Most of them are little credit unions and online banks that you might not normally have access to. But the beauty of this one is where you might be a renter, you've saved the 5%, but trying to save the rest of it is impossible, but you don't want to pay that loan mortgage insurance. That's the expensive insurance that you pay for that protects the bank. This will provide guarantee for that 15%, so that from that 80% to that 95% that you borrow, the bank will guarantee that for you. So they basically pay the LMI insurance for you. So that's a really great scheme. It is only, again, 10,000 places, and it's only available from the 1st of July this year, 2020, to the 31st of December. So if that's something that you, like if you're in the position now where you've got the 5% and can't see the light at the end of the tunnel, that might be something that you want to jump on now. Home Builder Grant. It's only a new grant that was released as part of the stimulus packages. Fabulous if you're building and constructing a property. If you sign a building contract between the 1st of July and the 31st of December this year, you'll be eligible, or more than likely you'll be eligible for it. The only issue with it is that banks aren't using it as part of your funds to complete. So it won't actually allow you to increase your lending or deposit, so to speak. But 25 grand to do driveways and post, what are they called, letterboxes and clotheslines is pretty cool. So that's something else that you can have a look at. So that's the grants and concessions, that the main ones that are in a nutshell. Obviously, there's heaps of information that sits behind them. Please reach out if you want to know more. All the stuff that I've just spoken about, the 5 C's of lending in your banking report card, obviously it's geared towards trying to get you to an A grade, but that doesn't mean there isn't a lender out there for you if you haven't quite got there yet. So don't think you've been precluded. This is just how you can take those steps to get there. And with that, if you have any further information that you would like to know about, Lisa will tell you how to get in touch.
Yeah, thanks so much, Lisa. Yeah, a lot of information there. I know it might feel a little bit overwhelming, but don't stress. We're going to send you an email, and Lisa has provided a downloadable ebook, call it what you will, Ultimate First Home Buyer's Guide, which pretty much goes through everything. So you've got it in paperback that you can refer to time and time again. I'm actually giving you a link to my property assessment tool as well, which is a free tool that you can use time and time again, and that goes through everything that you need to consider when you're inspecting property. So it's really valuable stuff that you've got access to. And you're probably thinking now, well, how do I get to work with you guys? Because, like, you know, I really do need some experts on my team, and who better to have than us? Well, all you need to do, we're going to send you an email with the link, and you can book in a call session with us, and we can work out whether we're going to be a good fit for you and vice versa, and see what we can actually do to help you get yourself into prime position and get that front row seat to be able to secure that home of your dreams sooner rather than later. Now, speaking of questions, we actually had a couple of questions that were emailed through us prior to the webinar, which we'll address right now. If anyone's got any questions, you're welcome to put them into the chat part, and we'll get to them as well if we've got time. So the first question that I've got here is for you, Lisa. It's how much does a mortgage broker charge?
We're very expensive. We're generally free to the consumer. And this is because it is cheaper for a bank to have a broker submit a transaction to them that I've already pre-assessed and worked it all out, got all the information that they need. I've done all the back work for it. I present it to them, and I'm only going to present them a transaction if I think it's going to get approved, because I don't get it paid unless it settles. So it's in my interest to get paid to make sure that it actually settles. So it's cheaper for the bank to do that. So once it settles, the bank will pay us a commission. That commission is not built into the loan, so it doesn't make your rates any higher or your repayments any higher. It is factored into the cost of doing business for the banks. So generally, brokers are free. Occasionally you'll find a broker, particularly now with the regulations and requirements, compliance, etc., charge a commitment fee, which is usually refundable at settlement anyway. It just means that if we do a bucket load of work and then the transaction falls over and it doesn't go ahead, that small commitment fee, which I think most people charge potentially between $300. Some brokers might charge up to $1,000, but I'm assuming they don't really want the business if they're charging that. But yeah, so brokers might charge a commitment fee, but generally they're refunded at settlement when they get paid their commission.
And do they all refund it, or do some of them just charge that anyway?
There are some that, and obviously it's an industry that is very diverse, so there are some that just charge it and it's part of doing the transaction. There are others like myself that I would refund it at settlement.
Yeah, I knew you would. Another question here that you can answer for us, Lise, if you don't mind. What is pre-approval?
Okay, it's a bit of a secret weapon. So particularly now with COVID, so not only from and Lisa will probably touch on this when I say that it can be used as a sales weapon, but at the moment with COVID and things changing on a daily basis in the lending world, a pre-approval is really handy because you will present all the information to myself. I will prepare an application, submit it to the bank and get them to tick off most of the items on there. So you know that you're actually okay for the amount that we've put it up for, pending the actual property valuation coming in okay. And that's really important because like we said about the collateral, if it doesn't meet the bank standards, then that approval won't qualify or be accepted, so to speak. But that pre-approval just means that they've checked your credit file out, they think your credit character's okay, they know that you can repay the debt, and the conditions and the way you've structured it are fine. It really comes down to that final hurdle of finding the actual property. So it's kind of like approval in principle, subject to the valuation and the property being suitable. And as Lisa will probably touch on when I say this, is that from a negotiation perspective, having your pre-approval in place can be sometimes the deal, it seals the deal.
The deal sealer.
That one.
Yeah. And look, it's good that you mentioned that, Lise, because it is a negotiating tool that we can use only if we need to. And I'll give you an example of that. It's like if you've got pre-approval, I would still recommend that you put your offer in subject to finance, particularly in the climate that we're in at the moment. Having said that though, if we get a gauge that there's a couple of offers on the table, to strengthen your offer, it could be, and it may be beneficial to actually make it unconditional. And think about it this way, I guess, is that if you were to purchase a property at auction, it's an unconditional purchase, which means there is no subject to finance, there is no subject to anything. So that pre-approval is what you need to have before you actually can bid at auction, just have that security. So we can use that as a negotiating tool if we're buying something by private sale, by having the offer as an unconditional sale, which will strengthen your offer compared to others that might be subject to finance. So that's just, it's a case-by-case situation, and it's something that we cross that bridge when we get to it, but that's what we can use that for. So, yeah, thanks for touching on that.
One of the other questions we've got, Lisa, is what are some of the questions that you need to, or that you could ask an agent when you go in to inspect a property? So if you're doing it yourself, what can you say to your real estate agent when you go in there to suss them out?
Yeah, good question. And again, this comes down to okay, so you need to make yourself known. If it's a property that actually interests you, and you're thinking that this is on your list of ones that you actually want to buy, I would introduce yourself to the agent and have that conversation with them and ask them some questions. And one of the good questions you could ask is, what's the seller's motivation? Like, are they looking for a longer settlement, or are they looking for a shorter settlement? And again, you can use this information to strengthen your offer. I had one client that the seller was after a specific date to suit their circumstances. So we put our offer in with that date as the settlement, or earlier by mutual agreement. And we actually secured that property. We weren't the highest price, but because the terms suited the seller, they accepted our offer. So, these are all things that you need to consider. So it's good to be able to ask those questions so you get a really good understanding of what the seller is after. Another good question I would be asking the agent is do you know that if there's any underlying issues with the property? And by law, the agent must disclose if they are aware of any circumstances or situations with the property that you need to know about. And that could be, if somebody's died in the property, or if, there's been a termite infestation that they're aware of. They actually
concrete cancer.
I know. But they have to disclose it, okay? If they know it, it's one of the laws from Consumer Affairs. It's an ethical thing. They need to disclose that information. So I'd ask the question. Can't hurt. Most of them will say, no, nothing, not that I'm aware of, because when a seller starts to tell them something, they go, I don't want to hear. So that's why you've got to get that building and pest inspection done. But yeah, there's some of the questions that I would be certainly recommending that as a first home buyer, you want to know the answers to.
What about the advertised price? Is that the amount that I would need to offer?
Yeah, that's a good one, isn't it? Because, it's that age-old tale of, what it's advertised for, and then it sells for, 100, 150 grand more than what it was advertised for. The way I can explain this is the advertised price is not the reserve price, okay? So I would certainly be having that discussion with the agent. Is the seller realistic? Would they accept an offer that's within the range? And that's what I would be saying. And, by law, they should be saying yes, absolutely. Otherwise, they're not quoting the right price. But the advertised price is actually the agent's opinion of what that property could sell for in the current market, not what it will sell for, because it's up to them to try to create that competition to drive that price up above that. Okay, so you've got to establish, what the seller's expectations are, and the agent should be able to give you that.
Following on with the agent theme, if they ask me what my budget is, how do I respond to that?
Yeah, and they will, because they'll want to try and, fish that information. They'll want to squeeze as much as they can out of you to find out, whether you're the buyer or not, and use you against the other buyers. So I would never tell them what your budget is, okay? Hit them back with, it depends on the property and what the property's got to offer. And if they ask you, well, where do you see the value sit in this property? That's where you turn around and say, well, would it be within the range that you've quoted? And if they say, it would need to be at the top end of that range, then I'd be saying to them, well, what's the comparable properties? Show me the comparable, because by law, they have to have a statement of information, and on that statement of information, it has to show 3 comparable properties that have sold within 3 months within a range, like, a location range of that property that they can derive that price from. So, yeah, I just hit that back to them. Maintain control throughout.
That's actually a really good, handy little tip to know. It's nice to know that there actually are laws out there to protect the consumer.
Well,
the final one that I had from the questions was, what does buying off market mean? So are they for sale?
Yeah, absolutely. So we're seeing a lot more of that at the moment, particularly because, obviously we can't go and inspect properties, but it's surprising. Like, I'll let you in on a little secret. There's been a lot of transactions that have been happening behind the scenes that we'll never know about because, well, I do because I'm in touch with the agents, but there's been a lot of off-market properties that have been sold sight unseen, believe it or not. They've seen images and they've had videos that the vendor has, or the seller has taken of the property to provide to the buyers. But there are buyers out there who are desperate to buy property. And because there's no new listings coming onto the market, the agents are actually using this tactic where they can actually convince a seller to sign up with them so that they can test the market with the buyers that they've got on their database. So they're buyers that they've come in contact with and know who need to buy a property, and they'll come to them and say, look, I've got, Joe Blow up the road wants to sell his property. Here's the images. Here's the floor plan. Here's a little sneak peek video. Do you think it'll suit you? And they say, yeah, that's perfect. I'll buy it. And that's been happening, believe it or not. I would never recommend that, but it's happening. Yeah.
So a buyer's agent or no one who represents the actual purchaser is actually going and inspecting these properties. They're literally sight unseen.
You cannot inspect properties under stage 4 restrictions. So the only way that you can purchase a property right now is sight unseen, which is bizarre because when you walk through a home, it's really important that you connect to it. Because like I was saying before, this is not just a house, it's your home. Like, you're purchasing a home and you're going to be creating your future there. So you need to be able to connect, and, that's a real thing, trust me. Because I know I've work with this all the time, where I'll go through a house that, I've done all the searching and assessing, and then we get to the inspection, it's perfect for them. Fits their brief perfectly. It's in the right location, it's the right price, right number of bedrooms, everything. Tick, 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 tick. My clients walk through and go, don't like it. They're just not connecting. So, it's a real thing. You need to be able to connect. But, people are actually doing it. And, we don't know what their circumstances are. And, given what we're going through right now, I know that there's a lot of people that are desperate to buy a property right now. They might have already sold and they've got a deadline. They need a roof over their heads. And it's just as hard to, it's either that or rent something for 12 months that you haven't even seen. So, it's really, it's bizarre, but it is happening, which is kind of scary to think that, which leads me to think that when restrictions are lifted, watch how quickly that activity starts up again. And we saw a glimpse of that in between that, lockdown 1 and lockdown 2, where that 2-3 weeks in between, it was like, everything got back to normal and there was just so much activity, and there are so many buyers out there waiting to purchase property, but the supply's not there. Like, there's not a lot of listings. So I think, sorry, what were you going to say, Les?
And I think people are taking advantage of this time and using it as an opportunity to actually prepare themselves to go in and purchase straight away.
Absolutely. And that's really important. But I think what's going to happen is, we'll see that influx of activity, and because there's not as much supply there as there will be demand, I think prices will pretty much stay level in some areas. Like, people saying, the market's going to crash, da, da, da. Well, which market are they talking about? Because, in Melbourne alone, there are so many different markets. And generally speaking, good property in good locations that are priced right will sell and get good results. But it's interesting. Crazy really when you think about it. When it all comes down to it, it comes down to supply and demand that drives the pricing on property. And I know that there's some buyers out there that have been a little bit cheeky and they're putting in lowball offers to try and get that bargain. But if there's competition there, that's not going to happen. As soon as that positivity starts to flood back into the market and sellers become a little bit more confident about putting their property on the market, which, you know, it might take 3, 4, maybe 5 weeks after restrictions are let down, because that's how long it will take them to get their properties listed and on the market. That's when I think we'll see that shift in supply, and the demand, if it doesn't, you know, meet the supply, that's when we'll see that shift in pricing go down, because there'll be more supply than there is demand. So yeah, it's the old DSR rule.
Hit in the egg, isn't it?
Yeah, I know. Are there any other questions? Has anybody?
No, not that I can see. And I'm conscious of time, so it's 5 to 2.
I know.
We're nearly taking up a full lunch break.
So yeah, look, we'd like to take this opportunity to thank everybody so much for joining us here today. And as soon as we get the recording stream available, we shall email that through to you with all the links to your giveaways and your access to be able to contact us, or you can just ring us now. But you can book in a call, book in a time that suits you to sit down with us, and yeah, we'll get it worked for you.
Excellent. All right. Thank you, everyone.
Yeah, thanks very much, guys. See you next time. Bye.